Copper, often referred to as Dr. Copper, due to its sensitivity to economic trends, stands at the forefront of industrial metals with diverse applications across construction, electronics, and renewable energy. As we approach 2024, investors are increasingly drawn to copper, recognizing its potential as a lucrative investment avenue. Beyond its intrinsic value, copper plays a crucial role as an economic indicator, reflecting the pulse of global economic activities. Amidst this backdrop, exchange-traded funds, ETFs, emerge as powerful tools, providing investors with a seamless pathway to tap into the copper market without the complexities associated with direct commodity trading. This comprehensive exploration aims to delve into 3 copper ETFs deserving attention in 2024, shedding light on the multifaceted factors that contribute to their attractiveness. 1. Global X Copper Miners ETF, COPX. Introduction. The Global X Copper Miners ETF, COPX, stands tall as an emblem for investors seeking a holistic exposure to the copper market. By targeting copper mining companies worldwide, COPX unveils a unique investment opportunity that spans the entire copper supply chain. Reasons to consider. Diversified exposure. COPX's allure lies in its innate ability to provide diversified exposure to copper. By investing in a carefully curated basket of global copper mining companies, the ETF adeptly mitigates the risks associated with individual companies. This diversification strategy positions investors to capitalize on the collective performance of the copper mining industry, ensuring a more resilient and stable investment approach. Potential for growth. Anticipated global initiatives in infrastructure development and clean energy sources are expected to stimulate a surge in demand for copper. COPX, by virtue of its strategic investment in copper mining companies, positions investors to potentially benefit from the increased demand for this essential industrial metal. The potential for growth is not only tied to the intrinsic value of copper but is also intricately linked to the broader macroeconomic trends shaping the global landscape. Income potential. Beyond the realm of capital appreciation, COPX introduces an additional layer of attractiveness through potential dividend payments. Several copper mining companies within the ETF have the propensity to distribute dividends, providing investors with not only the prospect of capital gains but also a consistent income stream. This income potential adds a valuable dimension to the overall appeal of COPX, particularly for investors seeking a balanced and income-generating investment strategy. Industry outlook. As we delve deeper into the industry outlook, it becomes imperative to assess the factors shaping the copper mining landscape. The global push towards decarbonization and the electrification of various sectors, particularly the automotive industry, has fueled the demand for copper. Electric vehicles, EVs, in particular, are major consumers of copper due to their reliance on copper-intensive components like electric motors and charging infrastructure. COPX, with its focus on copper mining companies, positions investors at the forefront of this industry evolution. The growing emphasis on sustainable and clean energy solutions further underpins the potential for sustained demand for copper, reinforcing the investment thesis for COPX. Macro trends. Examining macroeconomic trends is essential for any investor considering exposure to copper, and by extension, COPX. The intricate dance of supply and demand dynamics, geopolitical factors, and global economic conditions plays a pivotal role in shaping the copper market. With the geopolitical landscape undergoing transformations and global economic recovery in focus, COPX investors should remain vigilant to factors influencing copper prices. Potential disruptions in the global supply chain, geopolitical tensions in copper-producing regions, and technological advancements impacting mining operations are variables that could significantly impact the performance of COPX. 2. IPATH Series B Bloomberg Copper Subindex Total Return ETN, JJC. Introduction. The IPATH Series B Bloomberg Copper Subindex Total Return ETN, JJC, introduces a unique facet to copper investment by tracking the performance of copper futures contracts. Positioned as an exchange-traded note, JJC offers a direct play on copper prices, making it an intriguing option for investors seeking a more commodity-centric approach. Reasons to consider. Direct exposure to copper prices. JJC's defining feature is its provision of direct exposure to copper prices. By tracking the performance of copper futures contracts, the ETN offers a pure and unmediated play on the commodity. This direct link to copper prices can be particularly appealing for investors looking to align their portfolios closely with the movements of the copper market, aiming to capture the nuances of price fluctuations for potential gains. Liquidity and accessibility. As an exchange-traded note, JJC presents investors with the advantages of liquidity and accessibility. The ease of buying and selling shares on the open market adds an additional layer of convenience for investors, facilitating quick and efficient trading. Liquidity is a crucial aspect for investors, especially those with a dynamic investment strategy or those aiming to capitalize on short-term market movements. Risk management. Futures-based ETFs like JJC can be strategic tools for risk management and portfolio diversification. The low correlation of futures contracts with traditional equity investments means that incorporating JJC into a portfolio may enhance diversification, potentially mitigating overall investment risk. However, it's essential for investors to comprehend the nuances of futures trading and the associated risks, as futures markets can be volatile and subject to abrupt price movements. Industry analysis. Diving into the intricacies of the copper futures market is essential for understanding the potential benefits and risks associated with JJC. The copper futures market operates based on expectations of future prices, and investors in JJC essentially bet on the future direction of copper prices. Factors such as global economic conditions, supply and demand dynamics, and geopolitical events can significantly impact copper prices and, by extension, the performance of JJC. Understanding the macroeconomic factors influencing the copper market is crucial for investors looking to navigate the complexities of commodity futures trading. Commodity-centric approach. JJC caters to investors with a commodity-centric approach, aligning with those who prefer a more direct connection to the underlying commodity rather than exposure to companies within the copper mining sector. This approach can be particularly attractive for investors who want to capture the pure essence of copper price movements without the influence of corporate performance. Hedging strategies. Futures-based ETFs like JJC are not only instruments for direct investment but can also serve as components of sophisticated hedging strategies. Investors looking to manage risk in their portfolios may use JJC to offset potential losses in other assets, creating a more balanced and resilient investment strategy. 3. United States Copper Index Fund, CPER. Introduction. The United States Copper Index Fund, CPER, distinguishes itself by holding physical copper in the form of copper high-grade futures contracts. This unique approach provides investors with direct exposure to the metal itself, presenting an alternative avenue for those seeking a tangible connection to copper. Reasons to consider. Physical copper exposure. CPER's standout feature is its unwavering commitment to holding physical copper. By investing in copper high-grade futures contracts, the ETF ensures that investors have a direct stake in the metal itself. This physical exposure sets CPER apart from other ETFs that may rely solely on tracking the performance of mining companies or futures contracts. Transparent Index Methodology. CPER's tracking of the Summerhaven Copper Index adds an additional layer of transparency to its investment strategy. The index employs a rules-based methodology in the selection and weighting of its components, offering investors clarity regarding the factors influencing the ETF's performance. This commitment to transparency aligns with the principles of sound investment strategy and can be particularly appealing to investors who prioritize a clear understanding of the underlying mechanisms driving returns. Potential for positive roll yield. As a futures-based ETF, CPER has the potential to benefit from positive roll yield during the rolling of futures contracts. Positive roll yield occurs when the futures contracts held by the ETF are rolled, and the new contracts have a higher yield than the expiring ones. This phenomenon can contribute to enhanced returns for investors, adding an intriguing dimension to CPER's attractiveness. Industry landscape. Understanding the broader copper industry landscape is integral to evaluating CPER's potential performance. The copper market is influenced by a myriad of factors, and a nuanced analysis of these elements is essential for investors considering exposure to physical copper through CPER. One crucial aspect is the ongoing shift toward sustainable and renewable energy sources. As the world embraces cleaner energy alternatives, the demand for copper in applications such as electric vehicles, solar panels, and wind turbines is expected to rise. CPER investors are essentially positioning themselves at the forefront of this evolving industry, capitalizing on the increased demand for physical copper. Transparent investment approach. CPER's commitment to a transparent investment approach is underscored by its tracking of the Summerhaven Copper Index. Investors benefit from a clear understanding of the rules and criteria governing the selection and weighting of index components. This transparency can empower investors to make informed decisions, aligning their expectations with the underlying strategies driving CPER's performance. Market dynamics. While the physical exposure provided by CPER can be attractive, it's crucial to consider the market dynamics influencing the price of physical copper. Supply and demand imbalances, geopolitical events impacting mining operations, and advancements in mining technologies are factors that can significantly influence the copper market. Investors in CPER should remain vigilant to these market dynamics, recognizing that the price of physical copper is subject to fluctuations based on a multitude of variables. An in-depth understanding of these dynamics can empower investors to navigate the inherent uncertainties of the commodities market. Conclusion. As we conclude this comprehensive exploration of three prominent copper ETFs, COPX, JJC, and CPER, it is essential to underscore the dynamic nature of the commodities market. Copper, with its diverse applications and sensitivity to economic trends, presents both opportunities and challenges for investors. Each of the discussed ETFs offers a distinct approach to copper investment, catering to different investor preferences, risk appetites, and strategic goals. The broader macroeconomic context. Investors considering exposure to copper ETFs must navigate the broader macroeconomic context, recognizing the interconnectedness of global economic trends, technological advancements, and geopolitical events. The ongoing transition to clean energy, advancements in electric vehicle technology, and the evolving landscape of global trade are all factors that can influence the performance of copper and, by extension, copper ETFs. Risk considerations. It is imperative for investors to approach copper ETFs with a nuanced understanding of the associated risks. While these ETFs present opportunities for capital appreciation and portfolio diversification, they are not without risks. Factors such as commodity price volatility, geopolitical uncertainties, and operational challenges faced by mining companies can impact the performance of copper ETFs. Diversification strategies. Investors may also consider integrating copper ETFs into diversified portfolios as part of a broader investment strategy. Diversification across asset classes, geographical regions, and industry sectors can contribute to a more resilient portfolio, mitigating risks associated with individual assets. Future trends. Looking ahead, the trajectory of copper prices and the performance of copper ETFs will be influenced by emerging trends in technology, environmental policies, and global economic conditions. Investors should stay informed about developments in the copper market, regularly reassess their investment strategies, and consider adjusting their portfolios based on evolving market dynamics. In conclusion, while copper ETFs offer an avenue for investors to tap into the potential of the copper market, thorough research, risk management, and a long-term perspective are essential components of a successful investment approach in the dynamic landscape of commodities. As the global economy continues to evolve, so too will the opportunities and challenges presented by copper and related investment instruments.